All right, so good evening, everyone. Thank you so much for joining the webinar tonight, and thank you so much for supporting PU Prime. And today we are going to cover things regarding more on the commodities market. As you can notice that recently we do have a lot of huge movement, especially for the products such as the gold market, the crude oil, which is a thing that we are going to cover later. So not only that forex trading, stock index trading, Bitcoin, cryptocurrency that you can be focused. Actually, when we able to understand more and more different asset classes, you can be also able to have a very, very good trading journey ahead. So it's what we call as a diversification. It's quite important in the investment journey. So we try to organize this webinar to hope that it able to help you guys to further understand not only forex trading that you can do, you can be also try to align with the current market situations and find interesting products for you to trade. So we are going to start in 2 minutes. We wait for more people to join us first. And before we start, if you have any question, you can also type in the chat box. I will try my best to answer all of you. So hello, Fidelis. Oh, I hope you guys have a very enjoyable trading week, especially you can see that the trends for the gold recently is actually experienced some of the movement. So later we are going to discuss about the gold, like what to expect in the future and what's the historical trends for the gold markets. And we hope that you're able to understand more. So as said, we just explained the gold as a safe haven. We also trying to imply that in future basis, what can we expect for the gold, and as a trader, what we need to focus to trade gold in future. All right, so I think most of you guys already here. So we are going to start our webinar now. And before we start, here is a risk disclaimer for you guys. So this webinar is for informational and educational purpose only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instruments. Trading CFDs and others leverage products carries a high level of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposits, so it's important to fully understand the risk involved before engaging in trading. While we discuss market analysis and trading strategies, these are purely for educational purpose only and do not guarantee success. By participating in this webinar, you acknowledge that PU Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. So now we are going to start our webinar right now, and welcome. Today we are going to talk about commodities market. So in today's topic, we are going to cover a few things. So first thing is, why should we trade on commodities? So why is just forex trading not enough? Why I don't just trade shares market? Why I still need to explore markets such as commodity? And then the most important commodities that the global trader is going to trade is safe haven asset. So safe haven asset including gold market, including the silver. Why are them so attractive? And then what things that can make the move for the gold market as well as for the silver market. And we will try to discuss in 2025, what do we need to aware of when we are going to try to trade with these safe haven products. And then we also cover things regarding on the economics data, which is also very important for us if you want to trade with commodities asset classes. To explain in a simple way, normally investors will trying to go through the economics data to understand how will be the global economics performance. So if the global economic performance is good, economy data show a very, very positive result, then we could be expecting this should be provide some of the movement for the asset classes such as crude oil, the commodity that we're going to discuss, and it will also affect some of the movements such as the gold. Imagine if the economy is good, investors will shift their portfolio into higher risk asset, including the stock. So safe haven asset like gold might be dropping back. So as a safety investment, you not just can able to buy, you can long a product, you can also short the product. So short means that when the product's prices drop, you will be also beneficial from the trading. So this is the thing. And then we also understand the crude oil, which is also one thing that also quite important in 2025, because crude oil recently will have some impacts due to the OPEC productions, and then crude oil will be also affected by the relationship between Russia and Ukraine, which will be discussed further. So except for all of these geopolitical things that you can be focused for the oil, we will also discuss more and more main driver for the oil. So when you want to trade in the future, you understand when there is some market situations happens, you can find a more suitable asset classes, suitable investment products that you can be consider and invest. So now, why trade on commodities? The explanation here is quite long, but I can explain the very layman's term. So commodity is something where you can trade instead of like you just do forex trading, you just do on the stock trading, because sometimes different market situations, it will be more suitable for you to invest with different kind of asset classes. So sometimes it's a very good opportunity for you to have more and more exposure to different asset classes, because every day the market is going to be changes. So imagine if you just focus trade on the products such as GBP USD, we can't say the GBP USD is not good. It just maybe sometimes there will be a news that regarding of crude oil, such as there is a war. Then maybe sometimes there will be a news regarding that will be provide some of the market catalyze for the gold market. And if you just trade on the GBP USD, just for example, you cannot have a good exposure. So when you understand different asset classes, like you understand crypto as well, you understand stock index as well. So when there is a different market situations that's going to happen, you can try to invest in the right asset classes. So for example, if currently we have a trade war issue, then maybe investor will likely to focus on the safe haven assets such as gold. So commodities is something that very good for us to have a diversifications. We can diversify our overall portfolio. So it's very good for you to learn more. Now, we are going to discuss about the safe haven assets such as the gold. So what can be actually moving the gold movement in 2025? So explain the mentioned gold and silver is something what we call as a safe haven asset, because their value is quite valuable. People will perceive gold and silver, these kind of asset classes, will be very valuable for the investor. So imagine if there is a recession risk happens in the market, the cash don't have much value anymore. And if the shares, the stock market is not performed because company are losing the money, of course, sometimes as a bank, as an investor, you need to shift your portfolio into a more suitable asset classes, right? Because if you continue to focus on the shares, the stock market, when the company are losing money, when the economic situation is not very good, you will be suffering. So some institutional fund will decide to manage their portfolio. It's what we call portfolio restructuring or portfolio allocation. So they will normally sell out their equity market, try to shift this portfolio into other asset classes. So when there is a risk in the market, gold and silver normally will be good. Later, I will bring up more and more example. It's not just risk. And then the risk that is going to move the gold movement is trade more. It's a very famous, and I think everyone is going to know. And then next thing is, I think some of you guys might be familiar with it, but some of you guys might not, which is the US fiscal risk. So this is what we call the famous US debt issue, which is going to affect the global economy. And then we will also discuss things regarding on the monetary policy. So monetary policy is going to affect the safe haven movement as well, because monetary policy normally is something that the central bank is going to do by increasing the interest rate or reducing the interest rate. So when they're increasing the interest rates, means when they try to contract their monetary policy, then we could be expecting the value for money will be increasing, because when you save money in the bank with a high interest rate, you can gain more deposit rate. So this is a very good thing for money. So a lot of investors, if the interest rate situation is very high, of course, they will likely to convert into the cash and save money in the bank, and other safe haven asset classes like gold and silver, their appeal might not be very good. So demand for gold and silver might not be very good, because if you convert into the gold, you are not going to receive interest payment from the bank, deposit payment from the bank. So a lot of investors might be thinking that when there is a high interest rate, gold price will be dropping because of this issue. So this is also something that we will be discussed. And then later on, we will discuss on one of the major argument recently, which Donald Trump constantly want the Federal Reserve to fire the Fed Chair Jerome Powell. And then you can also link towards the current market situations where every time this statement coming out, gold price will be going up, because Trump keep pressure the central bank to cutting the interest rate. So as I mentioned, when they pressure the Fed to cut the interest rates, the value of money will be dropping. deposit rate will be lower. So nobody want to hold cash. That's why they will invest in the safe haven gold. So it's a situation right now that we will be facing, but we will discuss one by one. So the first thing is trade war. So actually, as for now, the most serious trade war, I think, should be launched on the early 2025. After Donald Trump become president, it's actually have a lot of trade war with different countries. But at this moment, the tensions of the trade war have been start to slow down, especially after Donald Trump set a 1st of August deadline 2025. A lot of countries have been starting to make some of the agreement with the United States, country including Japan. They have been signing a lot of agreement, including US and EU country also make some of the deal. So if we are going to discuss about the trade war issue, I would say the tension as for now for the trade war might not be that high anymore. So you can see that initially after some countries signing a lot of deal, you can see the aggressive discussions about the trade war, the trade deal should be around 21 to 1st of August. So you can see that after US President Donald Trump is actually making a lot of deal with different countries, the gold price recently continue to be dropping. So because of this good deal agreement, will normally support gold price to drop. But afterwards, gold price starting to rebound back because due to some other fundamentals. So we will be discussed later. So this is a historical movement. Maybe you guys might be thinking, so this is already historical. It's not going to move the market, right? So it will be useless. The answer is no, because Trump, you know that US President Donald Trump, he might be continue to have a lot of discussions about the trade war, the trade deal in a future basis. If he don't satisfied with the current deal with some of the country, he might be changing it. So by understand the historical movement for the gold, we already can come to one conclusion. So when US making a lot of deal with different country, risk appetite in the market will be very, very good, very high. Investor invest in high risk asset, gold price will be dropping. And if US president fail to make any deal with several countries or that even intensify the tensions between the US and other regions, then we could be expecting the gold price will be rebounding. So trade war is definitely one thing that is going to affect the market. So in terms of risk appetite, and then we can be extend it to a more serious situation, which is trade war tariff is going to causing supply-driven inflation. So this is another next level or more difficult level for you guys to understand. So everyone knows trade war is going to affect and make the economy worse, but actually how? So to explain the layman's term, trade war is actually going to cause everything become more expensive, which what we call as an inflation. So, and this inflation rate is different with a normal consumer push inflation. This inflation's outlook is driven by supply driven. So it's a supply issue. So this is something that is very, very difficult for us to solve. So if it's a demand driven inflation, then it's very simple. So imagine if inflation is very high because people spend too much of their money, and then like after the COVID period, the inflation in US actually fly until around 10%. So everything become more expensive because people spend more money. This is what we call the demand push inflation. But how to solve this issue is simple. It's just that central bank decide to increase the interest rate. When they increase the interest rate, you are not going to spend more of your money. Why? Because you prefer to save money in your bank. The second thing is you want to buy house or you want to buy more and more things, you need to borrow money, right? So in a high interest rate environment, you are not able to borrow money with a lower cost. So it will be quite discouraged for you to still borrow money and buy things. Things will become the borrowing rate, the borrowing costs is already so expensive. It will likely discourage you to buy things. So when this thing happen, you don't buy things, the goods, the prices of goods sold will be dropping, and which also can cause the inflation rate to be stable down. This is a normal situation. But supply-driven inflation is different because supply-driven inflation is something like people are not going to spend a lot of their money, but because due to lack of supply, price become more expensive. Or because a lot of supplier, a lot of company decided to increase their selling prices. So in a situation where even people don't want to spend it, but the supplier, the boss, they still want to increase the price because Trump actually imposed a lot of tariff to them. That's why they're going to encounter a lot of costs, right? So they have costs. What are they going to do? They are going to move these costs to clients for them to bear it. So this will be a situation that can make things become worse. Things become more expensive, even is not pushed by consumer demand. And then if the central bank want to control the inflation when inflation is very high, if the central bank want to control the inflation, they cannot. How they are going to control inflation is by increasing the interest rate. So if they're increasing the interest rate, the inflation will be dropping. But the boss still don't want to lower down the prices because the cost of raw material is too high already. So it will be even worse if the central bank decide to do it. Then if the central bank really going to increase the interest rate, then we will be in a situation where things become more expensive and then the bank even want to charge us more. So this is a worse situation right now. And that's why everyone is discussing about the supply pool inflation caused by tariff. And then this is also one of the reasons why Donald Trump constantly wanting the Federal Reserve Bank to cut the interest rate, but the Fed say they don't want, they disagree with it because what they're afraid is if they cut it and it will be a double push for the inflation. Things become more expensive because boss increase the prices and then lower interest rate will also encourage more people to spend more money, and then we will be in a situation where double inflation come out, and then it will be very, very hard to control. And that's why the central bank will be difficult to control the situation. And what's going on if this thing is going to happen? People might be in the suffering situations because everything become more expensive. And if you want to turn into our investment perspective, this should be a huge risk towards the global economy. And then the safe haven asset should be beneficial because why we say this is a bad things, worst thing that's going to happen to the market because central bank cannot do anything. So normally they can increase interest rate, cutting the interest rate to stabilize inflation. But if the inflation is pushed by the supply-driven inflations, then it will be super suffering. The bank cannot do it. Okay, so this is something that we can be discussed in the current situation. But of course, if you think this is too complicated, then you can just understand in a simple way where there is a serious escalations of the trade war, then gold price will be increased. And if there is an easing tension of the trade war, then the gold price will be dropping. But understanding the supply-driven inflation caused by the trade war is very important because later we are going to discuss about the argument between Trump and Federal Reserve Jerome Powell. You guys might be confusing why Trump keeps saying he wants to fire Jerome Powell and why Trump keep pressure the Feds to cutting the interest rate. This should be the main topic that everyone is discussing right now. So after you understand why the central bank quite struggle to cut the interest rate to save the economy, is because of the trade war is going to cause the supply push inflation. All right. So this is the current situation right now that we are facing, the trade war, and then we are going to discuss about the supply-driven inflation. This is a current situation that is going to affect the gold movement. I hope you guys have a brief understanding about it. And then we are going to discuss in the second thing, which is the fiscal policy, fiscal risk that's going to happen in the United States. Everyone is thinking and knowing US is actually the country who owe a lot of debt. In case you guys don't know, if you are going to look at this chart, US, you can see as a comparison, US is the top one country who are owning 35.29 trillion as of today of debt to multiple different countries. Debt to GDP ratio up to 131%. This should be quite worrisome towards the global market because you can imagine US in a situation where they owe people a lot of money and then they even want to spend more, and will be discussed later. You can see that recently, this is a overall chart for the US from the previous around 5 trillion up until 35 trillion in just 25 years. It's a very, very serious situation, and this is a this might be a quite serious thing that's going to happen in the future. And then what is worse, where the US government, they even want to increase their spending in order to boost the economy. So in a situation where you already owe bank a lot of money, but you still want to borrow more money from the bank to purchase a nice sport car, a nice house. But US is a different situation. So they have more money, they want to borrow from the bank. Why they want to borrow it is because they want to save the economy. And then this is a step-by-step where why US debt continue to be quite high. And you can see that from 2009 to 2024. And then the reason one, the trade war might be also effects on it. Analysts is actually expecting this can be causing the US debt increase from 32.8 trillion into 34.5 trillion. So yeah, trade war might not be beneficial towards the US economy, according to economists. But Trump have a different perspective. Trump expect that this trade war might be making other countries to pay for the US debt, and that's why US is currently trying to save the economy by using the tariff. So what will be the future? What are we going to expect in the future? We are still not sure yet, to be honest. The impact of the trade war, because it still run around 6 to 7 months, we still can't see the major impact yet. But if trade war is going to causing the US to become lesser and lesser, then of course it will be beneficial on it. But as for now, it might be not good. And then with the current situations that US debt is currently going to facing on, a lot of investors will be very, very worried on it. And then let's say how high debt is going to affect our economy. Imagine if US government face out of the liquidity issue and the government even bankrupt, everyone is going to be suffer on it, especially people in the United States. Your country is going to bankrupt. Your money is not going to become a money. The value of the dollar will drop sharply. We have seen that you can see Greece, Argentina, their currency is actually dropping aggressively when there is a debt crisis issue. So when this thing is going to happen, as I mentioned, we need to link back towards the market, right? So if the US not able to pay the debt, if the debt continue to increase sharply, then the currency value might not be high. And then this will sometimes will also shift their portfolio, it will cause the investor to shift their portfolio into the safe haven gold, because dollar value no longer have, gold price will be increased. So now dollar is actually something that going to be quite struggling, even though US dollar is a world reserve currency. But with this kind of possibility of the bankrupt, global economy will become a crash, because a lot of central bank is actually holding US dollar as a reserve currency. So reserve currency means that normally this central bank will use this money to save the currency. So imagine you are from UK, the pound sterling continue to be dropping, you will use your reserve currency, use the dollar to buy and save your money. This is a normal situation. So imagine if US is going to default, dollar might not be have any value. A lot of central bank is actually holding the dollar. Those central bank will be also suffering. So with this kind of era, we link back to the market. This is sometimes where the gold prices, the silver prices will be beneficial most on it. So even though now the news have been slowed down to discuss about the US debt issue, but this thing is definitely still around in the market. So in case in future you face this kind of news, don't worry about it. You remember you can be considered some of the safe haven asset to be invest on. Those who are just holding shares, stock index, equity market, and etc. Maybe it's the time for you to shift into other asset classes for you to be focused, like gold. If this step issue is going to happen, I can't predict it when will it's going to happen, but you can keep in mind first. So when you notice there's a news in the market, then you can adjust your portfolio. And then another thing is going to support the safe haven gold to be going up, which is the dollar trade right now. So dollar and gold, their relationship is actually a negative correlation. Negative correlation means that when dollar dropping, gold price will be increasing. And then, yeah, because people might be need to use dollar to purchase gold. So when dollar is very cheap, gold price will be cheaper. So this is the current situation and the classic situation in the financial market. So currently, the overall prospect for dollar in a future basis might not be very, very good in a very, very long-term basis, because now we can be noticed that there are few countries, especially the BRICS nations. BRICS nation included China, Russia, and some of the countries. They decide to less dependent on the US dollar. As I mentioned, US is a country who face a lot of debt, right? And then imagine you still holding a lot of currency, you still holding US dollar, which the country might be default soon, and you don't have any backup plan. You might be suffer, right? And you need to find solution to solve this. And that's why this is a form of the BRICS. And then that's why these BRICS nations is going to launch what we call the de-dollarization thing. They want to less depend on the dollar. As I mentioned, global central bank normally will hold dollar. is the reserve currency. But after this BRICS is going to form, they try to less depends on the dollar. And that's why they try to invest more in the gold to substitute on dollar. So they think dollar long-term basis might not be very good. They might be holding gold starting from maybe next few years. And this is going to continue to trigger the value for the dollar, trigger the value of the United States. And that's why this is also something that we need to bear in mind. De-dollarization is actually launching, but whether they will launch it huge or not, we still don't know. But definitely in future basis, if you look at this news, you understand, okay, so a lot of countries start to be less dependent on the US already. And maybe it's time for us to don't focus so much on dollar-related products. We can focus on other asset classes like the gold, like the silver. But this is also something that you can be aware of. And then another thing that is going to trigger of the dollar movement is the relationship between Trump and Powell. As I mentioned recently, Donald Trump keep pressure Jerome Powell to cutting the interest rate. They say he want to save the economy, even though inflation is very high due to tariff issue. But you can see that Jerome Powell is actually ignore him. And that's why there will be a risk where Donald Trump really going to fire the Jerome Powell. And if this thing is going to happen, it will be continue to affect the independent view. Normally, the central bank should be independent, right? But if this pressure is going to happen, it will completely affect the central bank independent point of view, independent perspective. So they will be listen to the government and that even will be collaborate with the government together. So what is worst case if central bank and government become a friends? It will be very, very serious. So imagine US is a country who face a lot of that. So when they face a lot of that, right? Not enough. When you collaborate with the central bank, you can force the central bank to print the money to pay back the debt. So the money can be keep printing and then you can just keep borrowing the money. So you can imagine when this situation is coming, the central bank and government work together, especially during the elections. They want to make their debt look better and etc. Of course, it will be keep pressure the central bank to print the money lah, and then pay the US debt. So this will be worse because value for dollar might be no longer be very, very good because people work so hard to pay their debt, but the government decide to print the money to pay the government debt. So of course, a lot of investors might be don't have much confidence towards the US dollar already. And this is a time where the gold price, where the things that you cannot be print might be beneficial, especially when dollar value dropping aggressively due to this thing. It's what we call the monetized debt. If you want to go and Google search for a more professional explanation, it's a monetized debt. So central bank print money to pay back the US debt. So they cannot we have a bias. They must be independent from the central bank point of view. But let's see whether Donald Trump can able to successfully pressure the Jerome Powell resign or not. If really doing it, then everyone will have a doubt against the independence of the central bank, and they might not have much more confidence on it. So every time you look at the news, especially when Trump first time announced they want to fire Jerome Powell, the gold price is actually increased sharply. So now you understand the situations. And of course, the next thing is regarding on the monetary policy expectations from the central bank in future is going to affect the currency movement. It's not just the Trump drama and Jerome Powell drama, and then we also need to focus on what is the real monetary policy decisions from the central bank. So we do have the upcoming central bank decisions on September, and actually majority of the investors are actually expect the Fed will cut in the interest rates by 25 basis points. So if they really cut in the future, cutting interest rates will also cause dollar prices to drop, beneficial on the commodity products such as gold as well as silver. It's simple for you to understand. So you want to trade with commodities such as gold and silver, you can also you must be focused also on the monetary policy decision. So this is all the main thing that as for now in 2025 that we will be focused on, and then let's see whether it can help in your trading journey or not. We don't discuss too much of historical trend because if you want to discuss historical movement like how the COVID-19 is going to cause the gold price increase, how the Russian-Ukraine war is going to cause a CFL increase, then it will be a very, very long story. But this is definitely the upcoming thing that you should be at least understand it, including trade war issue, including the supply-driven inflation, the fiscal issue, and then also the de-dollarizations, things that you must be understand, and then the conflict between Trump and Jerome Powell is also important. All right, and then after you understand this one, we can go through the simple one, which is the economics data. As I mentioned in the early webinar, economics data is simple. When economic data is good, means economy is good. Investor will sell gold, invest in higher risk asset, and economic data is bad, investor will buy gold. And then there will be tons of the economics data that have in the market. That's why we summarize up for everything. Normally, you can focus on three key sections, which is economic growth, jobs reports, and inflation. So these three things is the main thing that can driven the global economy. We need to make sure economic growth is good, people pay well, and then we need to make sure everyone got a job, and then we also need to make sure that inflation will be low. The things that you want to buy not so expensive. So how can you justify economic is good or not? You by looking of this important data. Economic data to justify economic growth, we have GDP, PMI readings, and retail sales. Jobs data, which is the most famous one, non-farm payroll, unemployment rate, average earning growth rate, initial jobless claim, and inflation report, we have CPI, we have PPI, we have PCE. So all of this is important data. And then the latest one, you can see that the non-farm payroll data is not good and causing the dollar to drop, then the gold price to be rebounding. So data is also one thing, and consider one of the most important things that are going to trigger the gold movement. So you want to trade gold, silver, etc. Data is also something that you need to bear in mind. Okay, so not just the discussions that we discussed earlier, you also need to understand about the data. So I think this is the main thing that going to move the gold movement and silver as for now. But of course, in future basis, it might be have more and more things are coming. So we stay tuned on it. And if we have more to update, then we will have this kind of webinar again to discuss further. All right. So after you understand the asset classes like gold, next thing we will be discussed on is the crude oil. So crude oil is something that is also very important and not that difficult for us to trade. Crude oil is affected by a few things. The first one is economic growth. The second one is the OPEC. And the third one is the dollar strength. So economic growth, as I mentioned, it will link towards the economic data. So normally if this data is very, very good, right, the crude oil prices will be also increased. And if this data is bad, economy is bad, then crude oil prices will be dropped. You guys might be wondering why we try to link crude oil with the economy. Explain in the layman's term is like crude oil prices will become high because demand for oil is very high, right? But what can cause the oil demand for oil to increase is by traveling. So you can imagine when you are in situation, if you are very, very poor, you're not able to travel, you are not going to use up the oil, right? So so we can justify that if economy is bad, nobody's travel, oil prices will drop because no more demand. And if the country is very, very rich, the global economy is very rich, you will be travel around the world, pay around the world, and then you will fly, right? You will travel, right? So demand for oil will increase, oil prices will increase. That's why oil and the economic growth is actually linked. And the second thing is OPEC. OPEC is quite simple. OPEC is just a group of people to decide, okay, from next month, how much we want to increase our oil production or how much we want to decrease our oil production. So simple. And then we also do have some of the geopolitical risks, including the Russia and Ukraine, which is unpredictable. So if you notice that there is some tension in the Middle East, which is going to affect the oil field and any oil-related countries, including Canada, Russia, Ukraine, and etc., then it will be causing the risk of the supply disruption and causing the oil price going up. So geopolitical tension is also something that we should be focused on it. That is going to cause some of the movement for the oil. And then next thing, dollar strength. Dollar very, very strong. Oil prices will be dropping because same thing. People will use dollar to buy oil. And then when dollar is very expensive, oil will become more expensive, demand for oil will be dropping. So yeah. And then we also try to link with the current situations for you so you can have a brief understanding about, okay, so this fundamental is really going to affect the oil. Instead of we just discuss it, we also try to use the real latest development so you can gain more understanding on it. So let's see, we are going to look at the oil chart. So you can see that recently the overall oil prices is actually continue to be dropping, but afterwards today it start to be rebounding back. You can see that this is the oil cash flow movement. So the reason being why oil price drop, we do have two big things. The first thing is the US non-farm payroll report is not good. Economy is not good. Recently, that last Friday, we have the NFP report. So initially, oil price dropped because investors expect economy might be not good. And then the second pressure that caused the oil prices drop is because OPEC just recently mentioned they want to increase the oil supply. So this is another thing that caused the oil prices to be dropping. But OPEC decisions to whether increase or dropping the oil supply is something really difficult for us to predict. But what the trader can do is they can don't trade before the meeting. The meeting schedule there will be listed on the website. Everyone can know when OPEC member is going to be made. But what is the conclusion of the meeting? We don't know. So for oil trader, if you love the risk, then you can try to trade during and after the OPEC meeting. But if you don't love the risk, you can don't. You can cross your position even before the meeting to be happens. So oil is going to affect a lot by OPEC lah. So depends on your luck is one thing, and then some people might don't want to depend on their capital because of some people's statement and etc. That's why some traders don't trade around the OPEC decision. So after you understand it, you understand, okay, so OPEC is one group that's going to affect the oil supply, which is going to extend it. It can also affect the oil prices. So you can don't trade before the OPEC meeting, or you can trade after the announcement from the OPEC. So you understand this is one thing that quite important. So you notice on OPEC, you understand what I say already. Okay, and then it's not just OPEC meeting, it's very, very important. We also do have, as I mentioned, global economic outlook, OPEC meeting, and then inventory report is also very important. So we do have EIA crude inventory report, which is going to release every Wednesday. So you look at the reading, higher reading means that higher supply for the oil, because a lot of inventory, lower reading means lower supply. So high reading of the EIA crude inventory will cause the oil prices to drop and vice versa. And then geopolitical tension, we are not going to discuss right now because, as I mentioned, this is the historical move, and then we can't predict the geopolitical tension. We can't predict when will the Russian and Ukraine have the war last time, and we also can't predict in the future what's going to happen. But from a trader perspective, you need to always stay updates to the market. When you understand there is a risk, there's a war which is going to cause or affect the oil supply, then maybe oil price will be going up. And then afterward, you can see when will that war start to be ended, when will they have a ceasefire deal. So this is something that you need to eye on also. So geopolitical tension is one of the major things that affects the oil. So quite interesting as well. All right, so this is all the things that we are going to discuss today, even though we try to pick some of the interesting products like silver, gold, and then oil. Definitely from pure you can trade out to multiple different asset classes like coffee, cocoa, oranges, etc. But if you want to apply to the current market situation right now, I would assume crude oil and gold is something quite famous for us to trade. Setting where you can see the movement in the stock market are quite slow. Maybe you can try to have a bigger exposure to other asset classes. All right, so this is all the most important things for you guys. And now I'm going to open for Q&A sessions. Anything you guys want to ask me before we end our webinar tonight? You can ask me any market related question if you're interested. Thank you so much, Fidelis, for your comment. Fully appreciate it. We hope that after you understand some of the fundamental, as I mentioned, I can't just let you know what to buy, gold, sell, gold, etc. Because you can see that all of this storyline, it depends on the latest market movement. So market updates. So you can understand everything first. When you look at the news, you can be easier for you to digest all. All right. Thank you, Charles, for your support also. For others, do you guys have any questions? If not, we are going to end our sessions here. And thank you so much for your time. And have a nice day and see you guys again next time. Thank you.